Welcome back to the Deep Dive. Today, we're going to get right into it. We're not just looking at a market. We are basically getting into the engine room of the Indianapolis commercial real estate scene.
That's a good way to put it.
We've got this incredible source that lays out the day-to-day, the expertise, and even the future goals of a key advisor there, Cara Conde.
Exactly. And our mission here is to use this one person's, intense discipline as a kind of shortcut for you, a shortcut to understanding what success actually looks like in that kind of hyper-local, super competitive CRE world.
It's not just a biography. It's a blueprint.
It is a complete blueprint.
And it starts with this really intriguing mix of skills. I mean, we're talking about someone with 2 decades of experience starting in high-stakes luxury homes, and this is the key, backed by a graduate degree in computer science.
And that's the blend we have to unpack. It's fascinating because that technical background, it changes the whole strategy. Today, it's just not enough to know buildings. You have to know the data.
Better than anyone else.
Better than anyone else. And this source gives us both sides of it. The intense daily workflow, the site tours, the meetings, and at the very same time, this high-level strategic plan looking years out to 2026. This is about more than closing deals. It's about modeling risk.
Okay, so let's start with that foundation, her expertise. We know she was licensed back in 2002, but what I find really compelling is she didn't just, become a commercial advisor at SVN Northern Commercial.
No.
She came in with the mindset of an owner because she'd already built a multi-million-dollar personal portfolio as an investor first.
And that is such a crucial distinction. It means she's looking at every single deal with an ownership mindset. It's all about long-term value and mitigating risk, not just how fast can we close this.
You're not just getting a broker.
You're getting someone who's actually dealt with capital calls and,
Right.
Leaky roofs and difficult tenants.
And her credentials really back that up. She's got these elite certifications that just scream high stakes. She's a certified negotiation expert, which is obviously critical, and a commercial syndication expert.
And syndication is, for anyone listening, that's the really complex process of pooling capital for massive real estate deals. That implies a serious level of financial fluency.
So if we connect that toolkit to the geography she covers, it all starts to make sense, doesn't it?
It does, because success in Indy CRE isn't just about downtown. The source confirms her focus is the whole greater Indianapolis area. Carmel, Fishers, Noblesville, Zionsville, Greenwood.
The list goes on. Plainfield, Avon, Brownsburg, Westfield. To cover that huge an area, you need some kind of leverage.
Right, and that's where she says the SVN platform comes in. This isn't some old-school solo brokerage. She's talking about real-time shared data, nationwide inventory access.
True collaboration.
Yeah.
But how does that data sharing actually, turn into a real deal on the ground?
It's all about the hidden market. In a decentralized market like Indy's, the best deals are almost always off-market. That shared network, that proprietary data, it lets her spot those little shifts and find those hidden gems way faster than someone just looking at the local MLS.
So the comp sci background pays off in actual returns.
That's the operational advantage right there.
The intensity of that model really comes into focus when you look at her daily calendar. This is where you see the discipline it takes to serve clients in, 9 different towns at the same time?
And the day starts before the sun's even up.
Way before.
It has to kick off with data. 6 a.m. sharp, black coffee, and then she's straight into what she calls the market pulse. So she's on the SVN research dashboard, scanning new listings, rent comps, absorption reports.
The key insight here isn't just that she works early. It's that she front-loads her day with pure, unfiltered data.
Before any client emails or calls can sort of introduce noise?
Exactly. And that data dictates the strategy for the next 12 hours.
I have to say, if I started my day with absorption reports at 6 a.m., my brain would be fried by noon. That's a real requirement for the job.
It is. Then, by 8 a.m., she's already shifted gears into high-level strategy. She's meeting a developer in Carmel, mapping out a mixed-use site on 116th Street. Thinking about that tricky layout retail on the ground floor with offices on top.
That's the big picture conceptual work. But then, just 2 hours later, the job completely pivots. By 10 a.m., it's boots on the ground, physical due diligence.
Right. She's touring a 28,000 square foot strip center over in Greenwood.
And the source gets specific. She's walking every single suite, checking dock heights for logistics, brainstorming how to reposition the tenant mix. It just shows you the job is both, high concept strategy and gritty, hands-on knowledge.
And here's where that collaborative leverage she mentioned comes into play. Noon is the SVN Power Hour, the weekly team lunch.
And one conversation at that lunch, one connection, led directly to a new listing by 2 p.m. It just proves that even in a data-driven world, human networking is what creates speed.
And that speed is what you need for the afternoon. At 2 p.m., she's in peak execution mode.
Dual focus. She's drafting a complex letter of intent for a retail pad in Fishers, which needs precise financial terms.
And at the same time, she pivots to a Zoom call with a multifamily owner talking about workforce housing south of the city.
I'm just struck by that pivot. Going from a small retail LOI in Fishers to this massive strategic talk about workforce housing.
Yeah.
I mean, how do you avoid burnout or, making mistakes when you're constantly shifting gears between asset classes like that?
I think it has to be a system. It goes back to that comp sci background. The workflow isn't random, it's modular. She's probably using standardized checklists and models for each asset type. It minimizes the cognitive load.
That makes that sense.
And the 5 p.m. wrap-up reinforces it. A quick team huddle, they celebrate a lease that got signed, and then, and this is critical, the need for balance, a run or yoga.
It's not a luxury. It's required maintenance to keep up that pace.
Exactly.
So let's pivot ourselves from the day-to-day grind to the long game, because every single one of those actions is feeding a bigger machine, right? It's all building towards specific market opportunities she sees for 2026.
Absolutely. And that forward momentum is driven by 3 hot trends she's identified. First, logistics flex space near the interstates.
That's the industrial demand spillover. Makes sense.
Second, last-mile retail pads. The idea that e-commerce needs physical pickup points close to home. And third, maybe the most important, is mixed-use developments along those big growth corridors like Geist and Carmel.
And those predictions are directly shaping her own professional goals. It's all framed around creating more value and efficiency for her clients. She wants to facilitate more off-market and value-add deals using that national SVN reach.
It's that unlocking hidden gems theme again.
It is. And she's also, not surprisingly, doubling down on tech. She has a 2026 goal to really deep dive into AI-driven valuation tools. The idea is to make recommendations faster and sharper.
Which is key. But let me just push back on that for a second. How much sharper can a recommendation really get before you run into a wall of human factors? Zoning boards, permitting delays, surprise construction costs. Is the AI advantage maybe a little overstated here?
That's a great question, because at the end of the day, the human element is still that negotiation skill, the CNE certification.
Right. But I think if AI can process 10,000 data points in, say, 2 seconds, well, a human takes 2 hours? That speed alone gives her an edge.
An edge in just identifying the best targets to begin with.
Before competitors even know they exist. Speed in identification, human skill in negotiation.
Okay, I can see that. And she knows client education is key to this. Her third goal is hosting quarterly workshops on things like prop tech, ESG upgrades.
Environmental, social, and governance.
Right, and also capitalizing on Indiana-specific incentives.
That sustainability focus is so important right now for future asset values. She's not just saying go green. She's advising clients to start with a formal energy audit and to immediately look into Indiana's new green rebates.
So the local government is basically providing financial leverage for these upgrades. Smart.
We've covered the pace of operations, but we can't have this conversation without talking about the specialized financial mastery this all requires. I mean, the source highlights a whole toolkit of financial terms.
It's the difference between being a property scout and a true capital consultant. A great CRE advisor has to be fluent in the language of finance, of acquisition, of tax. The source shows she's focused on mastering and explaining concepts like cap rate and net operating income, or NOI.
Which define a property's current profitability.
Exactly. But the real complexity isn't evaluating future growth and risk. That's where you get into terms like internal rate of return, IRR, and the ultimate payout calculation, the equity multiple. These go way beyond simple cash flow.
They determine if a multi-year investment even makes sense.
And let's ground this in that 2 p.m. strategy call she had, the one about workforce housing. That conversation immediately gets into the debt service coverage ratio, the DSCR.
Which is everything in today's interest rate environment.
It's the knife's edge. The DSCR is just the ratio of the property's income to its debt payments. If that ratio isn't high enough, say 1.25, a bank won't even look at the deal. So being able to manipulate the variables to hit that DSCR threshold, that's strategy, not just sales.
And that fluency then gets applied to these very specialized investment strategies, like the 1031 exchange for deferring taxes.
Right, where you can roll your profits into a like-kind property to defer capital gains, and that gets really tricky when you're moving from, say, a simple retail space into a complex mixed-use syndication.
Speaking of syndication, the source also mentions commercial syndication for pooling capital, the SBA 504 loan program, and even these niche housing types like small multifamily and single-room occupancy, SRO housing.
And those require deep knowledge of regulations, not just market prices.
Ultimately, though, this entire financial toolkit is pointed at and validated by what's happening on the ground, the local economic drivers.
Exactly. These are the anchors creating the demand she's targeting. The source specifically mentions things like Cadillac's new Formula One headquarters in Fishers.
A huge corporate relocation.
Huge. And the Pickler's new indoor pickleball facility in Westfield, which points to lifestyle growth, and the Rex Park development in Whitestown, which is reshaping an entire area. Those are the specific data points that fuel that 6 a.m. market pulse.
So let's bring this all together for you, the listener. What's the core knowledge here? What's the takeaway from this deep dive? It seems clear that success in the indie market requires this structured triad.
It does.
Right.
Intense, data-driven organization. That 6 a.m. scan is non-negotiable.
Then there's the deep technical expertise, that marriage of finance and computer science.
And finally, a really sharp 3-year strategic focus on what's next, on AI, ESG, and those shifting growth corridors.
I think the real value is seeing how it all connects, the action and the foresight. It's this blueprint for maximizing opportunity, showing the entire life of a deal from that first 8 a.m. coffee meeting vision to the physical due diligence all the way to the technical drafting of an LOI at 2 p.m.
It's the full picture.
And we've focused a lot on the commercial side, but we have to remember, her background includes luxury residential. And her focus on these booming suburbs like Fishers and Carmel, it bridges both worlds.
That's a great point.
So here's something to think about. This commercial growth, the new logistics hubs, the mixed-use centers, they are leading indicators. So what are the specific ripple effects of these suburban commercial trends on the luxury housing market in those exact same towns? The two aren't just related.
No, they're deeply intertwined. The rising commercial value often sets the price ceiling for the residential neighborhoods right next door.
Exactly, something to mull over as you watch that Indianapolis sprawl continue.